Oh, welcome, welcome. Godric here, your stock market mentor. What's going on? Monday night, uh, January 27th, 2025. Better late than never, I always say. Because why not? It's a rainmaker. It's not rainmaker in the house. Going to talk about some stock market stocks tonight. Oh, look, the Dow Jones was up almost 300, 44,713. You guys thought it was going to crash. You guys buying puts. Welcome, appreciate you guys. It's raining money. What's up, Rainmaker? Yeah, make it rain. Make it rain with what? What kind of trade you're making? You want to come up here? Let's do a short session tonight. I know this is late. Some of you guys, sorry, have to work tomorrow. Man, it must be tough to have to work. Man, I don't know what to say. You gotta get your financial plan ready, you know? I mean, how long do you guys want to work? 9 to 5? Let's use this logic. Let's all get together and go to work at the same time in the morning. Massive traffic. Let's make that make sense. I think some companies like start you at 10, you know, a little bit better. All right, guys, appreciate you. Okay, so the Dow Jones was up because of what has those fat dividend stocks. But let's see, not all the stocks are up. Look at this. The triple Qs were down 15 points. Why? So that's a divergence. The Nasdaq was down 600 points to 19,000, off of its 20,000 high. SPYs were down 8 points. That's the SP 500. Look at these dividend stocks. McDonald's up 7. Look at that dividend, 2.48% yield. Write that down. Pepsi plus 5, 3.63% yield. This is where the money's going, guys. Philip Morris up 3, 4% yield. It's kind of cut off. 4.24 yield. Starbucks 2.47 yield. Starbucks is at 100. Were you guys worried? What else? Coca-Cola was up. These are all consumables, consumable dividends, because people got to eat, because we get anxious and we start, chomping on sugar and stuff. 3% dividend. Oh, dang, drop the cranes. Thank you for the cranes. Appreciate you. Look at that. Now, finally I get respect after all this time. That's how it works. Like, you get respect at the last moment, at the last day. Thank you. Appreciate those coins. Also, get the likes up, guys. Thank you, sir. Get the likes up. Maybe 1,000. Appreciate you. Thank you, Rainmaker, for those coins. Appreciate you. Love those cranes. So, what happened? The Nasdaq stocks got dumped on today, and the Dow stocks were up. So that's one reason to have dividend stocks, because, they do better sometimes. Why? Because of this guy here, DeepSeek. DeepSeek is a Chinese AI platform app. Supposedly, it gave America and Nvidia a run for its money. And I downloaded it. It was cool. I mean, it can't draw. Like, if you want to draw something, don't use DeepSeek. You can't draw nothing. It just answers questions. I guess it's good. It's free. You can check it out. So they're trying to say, like, Chinese AI is better than American AI. And what happened? Nvidia got slammed. Let's see. Do I have Nvidia up here? Let's see. Nvidia 118 down 24 today. Ouch. Man, 800 million volume. Because why? Because they think the Chinese AI is more efficient than Nvidia AI. Yeah, pretty much. Is it true? I don't know. You can check out the DeepSeek app. I thought it was interesting. I want to talk about NVIDIA for a second. Here's a trade for you. So what you do, you wait for these great stocks like NVIDIA to dip. And then what? What do you do? Like a sniper, go in for the KILL. So if you liked it at 140, you got to like it at 118, right? It just makes sense. And let me show you a trade real quick. First of all, NVIDIA, if you look at the next month's cover call, it's showing me, some of these are blank, sorry, but if you just look at the 125, which is 5 points of share growth, it's paying 740. See that? So let's do the math on that. Buy NVIDIA here at 118, because what? Because it dipped. If you don't have it yet, or if you have it, you can go in, you can double down, and you're gonna write the cover call for the 125, which gives you 7 points of share growth and 7 points of premium, 740. Let's do the math. 118.42. Actually, the premium 740. Premium divided by the share price of 118.42. You're getting 6.2% return in 30 days. And that means 62% per year if it maintains that. Probably it might maintain that. And what? If you lost 24 points today and you're getting 7 points for a cover call, it would take you like between 3 or 4 months to just get that back. There's no worries. There's a plan in action. And then after that, the rest is just profit. Because a cover call gives you basically income. If you're selling your stock for a higher price, you're getting, thank you for joining the team, you're getting cover call money every month. So you buy the shares here at 118, so 11K, 11.8K, 100 shares. Write the cover call for 30 days here, showing the 125, which I like, the sweet spot, 740, giving a 6.2%. Write that down for your trade. It's a cover call. It's a consistent monthly income for your shares. Because what? Because you don't want to have to go to work your whole life. You want to have some kind of financial plan. I'm trying to show you, write it down. And speaking of which, let me see something here. Okay, here's another trade for NVIDIA. So it dipped 24 points, right? So here's what you do. You go out to June. This is a 6-month trade, okay? Actually, 5 months. You buy the 100 cover call. I'm sorry. You buy the 100 call, which is in the money. And what? You're going to pay about $27, $27.50? $27.50, which is $2,750, okay? Call NVIDIA June 100 strike. Why? Because it dumped 24 points. And we want to take advantage of that dip, right? Okay, now why buy a call in the money? Okay, well, if you buy one contract, one call of NVIDIA, you technically control 100 shares, okay? Firstly, if you were to buy 100 shares, it would cost you 11.8K, let's say 12K, here at the price it's at, and you'll have 100 shares. But you can buy 100 shares for 12K, or you can buy one call 5 months out, the 100 strike for only $2,750. So there you have a reduced cost to control 100 shares in NVIDIA with the one contract. But it only lasts 5 months. So you only have it for 5 months. Think about that. So now what do you do? What do you do? Once you have that call, right, for Nvidia, 100 strike, 5 months out, you have a 5-month trade. What you can do, that call you have, 100, it has value. Just like the shares have value, the call has value. And what you do, you sell the higher call against the lower call. So I think I pulled it up, so I did it right. Here we go. So if you own the 100 call for June, which is like 143 days, you sell the higher call, let's say the 138 for 20 points higher for $360, 360, 365. You see that? The one for $360, 360, 365. You see that? The 138 strike is showing 365 by 380. So you can sell this. The 138 strike is showing 365 by 380. So you can sell this 100 that you own for June. And this is the month, by the way. This is the monthly I'm showing here. 100 that you own for June. This is the monthly, by the way. This is the monthly I'm showing you here, 30 days out. So you can do this 5 times 5, which is to say that your investment is $27.50 and you're getting $365 per month. That's what I'm showing you. And also you have a chance to make more money on your call that you bought, the 100 call, which is a good deal. At least it's a discount, the 100 call which we bought. So let's do the math on this, okay? 360 income, 365 for writing the 138 call, 20 points up from your 100 call, divided by your investment of $2,750 is 13%. Wait, I did it right? 3.65 divided by 27.5. 13.2%. 13.2%. 13.27 actually. So while we're showing you the Nvidia cover call, which gives you 6.2% return, $740 for about 100 shares in Nvidia, writing a cover call every month, like just under 12K investment. You can actually buy the option 5 months out and get a like double return, more than twice the return, by writing the higher call every month. And the value is, fast forward 5 months, and you'll have 365 times 5. You'll have $1,825 income from writing those higher calls, plus you'll have a call option of 100 for Nvidia, which is probably going to be worth $5,000 because Nvidia will probably be 150 in 5 months, give or take, whatever it's worth, you know. So I call that a win-win. You're taking advantage of the dip, and it was like a dip, for no good reason, just because you get upseated by like a competitor. It's like a good reason, like stupid reasons the stock drops, you know, are good reasons to buy the stock. If it really had problems, like SMCI or something like that, then maybe you wouldn't do this trade. But Nvidia is pretty much intact. It's still golden. It just has some, I would say, competition. So you have two examples of a cover call at 6.2%, and you have what I call a poor man's cover call, or a spread where you're getting 13.27% a month. There you go. And that's the trade of the day. That's taking advantage of the dip in Nvidia. Questions? I'm buying them calls tomorrow. What's up, Evanov? DeepSeek on Pump Fund just dropped. It's gonna moon. It's, thank you, Coleslaw, for that. DeepSeek, by the way, thank you for the credit. DeepSeek, by the way, isn't even a stock. This is what I think sometimes, like, the stock market's crazy. Like, DeepSeek is a Chinese private company that does AI, but it's not even a stock. So why would they really give Nvidia problems? You know, it's just a private company. Kind of like ChatGPT, OpenAI is a private company. Nvidia has stock. You know, Meta has stock. They do AI. Other AI companies, you know, have stock. Questions? Thank you, Tamara. Appreciate the crane. Thank you for the coins, guys. Get these likes up. Oh, thank you for the likes. Let's get to 2,000. Can we get to 2,000? So that's the Nvidia trade, taking advantage of the dip, and you can see how the Qs and the SPY went down, mostly because of Nvidia, but the Dow stocks, the dividends were up. So there you have like a classic divergence, and in that case, the Dow Jones outperformed the Qs and outperformed the SPY, and probably look correct. Probably tomorrow, the next day, will probably go back up. If there's no more problems, it'll probably go back up. You know, China's always going to be there, giving us a run for money. But we have to be resilient. We have to buy those dips if we like the stock. Okay, what's I got for you? Here's a stock that, do I have this stock? Here's another stock I found today, or one of my people, Raymaker, gave this to me. VST Vistra Corp. Let me see if I can pull it up. Research. This one was down 50 today. I think probably related to DeepSeek. VST. Vistra Corp. 142. It was around 200 before it dropped. Vista Corp, together with its subsidiaries, operates as an integrated retail electricity and power generation company. The company operates through 6 segments: retail, Texas, East, West, Sunset, and asset closure. It retails electricity and natural gas to residential, commercial, and industrial customers across the states, the United States, and the District of Columbia. In addition, the company is involved in electricity generation, wholesale energy purchases, and sales, commodity risk management, fuel production, and fuel logistics management activities. It services approximately 5 million customers with a generation capacity of approximately 41,000 megawatts, with a portfolio of natural gas, nuclear, coal, solar, and battery energy storage facilities. This is a company you want to have in case the power grid goes out. Maybe they have their own power grid. I'm not sure, but it sounds like they're in demand. And they are in demand because what? I have 32 million volume. I'm not sure, but it sounds like they're in demand. And they are in demand because what? I have 32 million volume. I got a market cap of 46 billion. Oh, by the way, the 46 billion, that's kind of like a magic number for market cap, because this is the threshold going to 50 billion, which obviously it had that before it dropped. And that's a great size that the stock can really, the company can really grow. Let's say it grows to 100 billion, then it doubles. It goes from 46 billion to 100 billion, it doubles, and the price can double to 280, for example. Because why not? The 1-year chart shows the stock going from 40 to 199, and then today to 142. So it's moving really nicely on the 1-year chart. So probably this stock will probably start climbing back up. You want to take a look at it. This might be a buying opportunity. VST, they're in demand. I can show you what they have a PE. The PE is 36, according to this, which is fairly valued, I guess. They have the volume, they have the chart, they have the 5-year chart, 10-year chart. 5 years ago, they were $23. So they've been growing in the last year pretty rapidly. Got the volume, and let's look at what? Let's look at the cover call. Click on options, click on all. This one I know has a cover call. I was looking at it. They also have a 2-year. Let me look at the 31 days out, February 28th. Okay. VST. I'll show this to you guys. I think this is this might be the March 38 days. Wait, hang on. The March 21st is 52 days. The 140 is 15. Oh no, it says 11. Go back to 38 days. Go back to 38 days. This 140 says, yeah, 11. So this is 31 days. This option chain for VST. So you buy the shares here. Why? Because it dipped at 137, so 13.7K. It's a little more than Nvidia. And we can write the cover call for, I want to say, the 146, which is $9 higher, is paying $9.60. So here's the sweet spot. Buy the shares here at 137, sell the 146 cover call, 9 points higher for 9 points of premium. $9.60. VST 137.08. Right, 1cc, that's 31 days out. 146 strike for $9.60. And let's do the math on that. 9.6 divided by 137.8. Oops, I get it wrong. 9.6 divided by 137.8. 6.9% return. Better than Nvidia a little bit. 6.96, which is 69% return for the year if you do 10 cover calls, which I always plan on doing. I'm doing cover calls. And probably, since it dipped, it'll start climbing back up. So give yourself, some share growth. In this case, at least 9 points. And that's probably a good trade because you're taking advantage of the dip. In this case, at least 9 points. And that's probably a good trade because you're taking advantage of the dip. That's how the stocks work, guys. They go up for like 2, 3, 4 months, and then they dip back down after, like, in one day. That's just how it works. And, massive selling because people are probably taking their profits. And, maybe bad news came out or someone's selling and it drops drastically. And then what? Then it starts climbing back up slowly. That's how it works. Write this down. You got VST tonight. You got Nvidia. Follow these stocks. Probably what? They'll probably start climbing back up because they're good stocks. Okay. Questions. How about a spread trade PCC or VST? PMCC, Rainmaker. PMCC, have we been doing that stock? PMCC. Is that Peloton Minerals? Is that right? I got a 6-cent stock here. I got a penny stock. You can't be in the penny stock. I must have got it wrong. Real educated game. Thank you, Gerson. Appreciate you. I try to come on every Monday night, a little late tonight, sorry guys, but talk about some positions, talk about some stocks. Today, Nvidia dipped because of DeepSeek, and probably it'll climb up. If you guys remember, Nvidia dipped twice to 100, like in the last 6 months, and it just came right back. This is the third time it's dipping, so probably it'll come right back. And this other one, VST, probably the same thing. Appreciate you. Oh, the poor man's cover call on VST. I got you, Rainmaker. Okay, let's look at that. I don't have it here for you, but I'll do it on my computer. Poor man's cover call on VST. So let's go out, what? At least 6 months. We went to, oh, you know what? This doesn't have, oh, here we go. Hold on. It does. I got to put get all the option chain. You guys know about the option chain? You can learn about these option chains. Each stock has like 1,000 options. I'm showing you the exact options to get you the money that you need to get paid monthly and retire in the stock market. So write this down. We're going to buy a call on VST, going to go out 6 months to July, 171 days, 171 VST call. Why? Because it's down 50 points today. So we're going to get a good buy. July, we're going to go into the money because we want to have a successful trade. It could go down a little more. I'm not saying it won't, but probably it'll maintain here and go back up. So let's say we buy the, should we buy the 120? What's the lowest it can go? Let's buy the 120 call, and that'll cost us $34.40. 120 call, VST, 6 months, 171 days. That's a 120 strike, and that's $34.40 for July. That's $3,440. Remember, we're talking about buying Nvidia 100 shares for $11,800, or we can buy the call option for $2,700. Well, this one, instead of paying $13,700 for the 100 shares, we can buy the call option 6 months out to July for $3,470. And that gives us leverage of 100 shares. Not quite, but that's the plan. So then we're going to write a higher call every month. And let's go back to our 30 days. February 31st. February 28th, 31 days. And if the stock is 137, right, you're going to own the 120 call. So I would write maybe like the 160. The 160 is paying $550. $550. Because I want to give plenty of room for the stock to come back. So you own the 120 call 7 months out. You write the month to month, you write the 160 strike for $550. You get about $550 a month. Okay, every month. Let's do the math on that. 5.50 divided by your cost of $34.70 for the lower call. So you own the lower call, you sell the higher call. That's called a poor man's cover call. 15.8% return. 15.8% return. So when Nvidia was given a 6.2% on the covered call for the shares, writing the higher call, the Nvidia poor man's cover call gave us 13.2%, more than double. Now the VST gave us 15.8%, and the cover call, this one was giving us a 6.96%, so more than double again. So yeah, so I like this this trade. Check it out. And then fast forward 6 months, and you'll have about 550 times 6. You'll have $3,300. Oh, look, that paid for your investment of $34.70 of buying the call. Look at that. And then on top of having your $3,400 income, you have a 120 call for VST, and probably that'll be worth $5,000. If the stock is 170, it'll be $5,000. I don't know. We'll see where it is in 6 months. But write it down. Poor man's cover call strategy on Nvidia and VST. Because why not? Appreciate you guys. Thank you for the cranes. I like this trade. Let's make it happen, Raymaker. Because why not? Take advantage of the dip. And the market's kind of like, if the Dow Jones didn't roar back into positive, I wouldn't be so confident. But the fact that the Dow Jones just was so strong today shows that even if China messes with us, we're still gonna, prevail. questions. We'll do a short one tonight. We'll wrap it up. Uh, I don't really have much else for you tonight. We can talk stocks, we can do questions, and then we can wrap up. Appreciate you guys. Thank you for the likes. If you guys want to throw me a sub, I will. You can come up if you want to talk. Subs can come up if they want to. Let's see. Maybe wants to come up. And if you want to DM me, I will take questions. One question at a time, please. Don't blow up my DMs. Just one question at a time. Rainmaker.
Big G.
Is
I
it
was
is
about
it
to
too late? Is
sleep,
it too late
but
for you?
you just showed me such a good trade. Now I can't sleep. I'm gonna be thinking about this till 6:30 in the morning.
15% return, man. That's not bad for a poor man's cover call.
Not bad at all.
And normally buying the 120 call in the money is no big deal, but because it did 50 points, I feel like it's gonna pop right back up. What do you think?
That's exactly my thought. And
Yeah.
actually the reason I asked is because I wasn't interested in buying 100 shares, but that's why I like the spread on this.
Yeah. Let me know if on Fidelity the requirement, the maintenance requirement is 30% on the VST. That'd be interesting. That way you get the bang for your buck if the requirement is 30%. And also, we know
But
Nvidia is 30%, right?
do they, question for you, do they keep a requirement even when you're selling a higher call to cap the lower call? Or because I thought that's a contained trade, right? So
No, no, no. That's cash. That's just spread money. The
right.
requirement is if you have the shares. It's only if you have the shares.
Okay, yeah, yeah, that's what I thought.
So if you want to do the standard cover call, if you want to collect shares, then that's when the maintenance comes into play, which is I think 30%. If
Okay.
you're doing options, you're paying like 100% cash for the option. So you're paying 2,700 for the Nvidia, and then you're getting back 360 a month, let's say, or 400 a month. And then for the VST, you're paying 3,400 for the
Yep.
120 call. You're getting back about 550 a month. This all cash, no maintenance, just cash.
And it's only really 2,900 for the VST then if you subtract your first month premium. Not bad at
Yes.
all.
And you can do, if you want to, you can do that in one trade. You can buy the lower one, 120, and sell the higher one. And it's called a calendar if you do different months. So you're
Right.
doing the month to month on the poor man's, but then you own the farther back one, getting the income every month.
I think that's the trade I'm doing tomorrow. I love it. Thank you for going through it.
We'll see how it turns out. I mean, probably it'll be successful. Like some of these trades, if you can get like 7 or 8 wins to maybe two or three losses, you'll
Well, I'm
do
gonna do
fine.
both. I'm gonna do Nvidia and this because I know Nvidia is gonna be fine. I don't know about this one, but I have to say this one has been popping up a lot on TikTok today, and I guess maybe Nancy Pelosi talked about VST. That's why it's becoming kind of popular. And the reason it also dropped is because the hype that kind of was going around with AI requiring so much energy. The thought process was, I mean, I know this isn't true, but it was like, oh, well, if we don't need that much compute, then we don't need that much energy. So, it's part of the narrative.
Maybe we need that energy stock in case the grid goes down. The
Yeah, that's
VST.
an interesting thing.
They might have their own support network.
Maybe.
Are you there tomorrow?
I am.
What do you got for us tonight?
Oh, I'm just happy about my trade. I tried to get into a short or a I tried to short Nvidia today, but it didn't it didn't work. The
What
the
did you short
price
it at?
the price was dropping so fast it wouldn't even take it. So I
Oh,
just I just let it fall to where it fell and then just bought out. So I bought some shares today and I
okay.
started a cover call on it.
Nice.
Yeah.
Um, I always say like whether you're shorting or you're going long, you can be successful because like for Nvidia, for example, like we know, I remember it dropped down to like almost 100 or like in the 90s like twice in the last 6 months, and now it's dropping again today. So it's just like a matter of time before it drops. So you can literally buy like puts like I don't know 6 months out, whatever, and eventually your put will probably come in if the stock drops. You know what I mean?
Mm-hmm.
So, and just be patient, and then even if it's a good stock like Nvidia, they dip, and then your put will come in if you're short.
Yeah. So I'm basically gonna look at the history and then, kind of guesstimate how long I want that put, right? Correct.
Yeah, if you look at the 6 months, I think this is the third time it dipped pretty bad.
Okay.
But I mean, I still think Nvidia is a long. Nvidia is, I mean, it went up so much. It's kind of like digesting all its gains in the last couple of years.
Yeah.
But I think it'll still end up going higher.
I was only interested in shorting because I knew it was gonna go down today, but I'm not interested in shorting it on a continual basis because I think it's a good stock. I think it's gonna go up. So for the short term, I wanted to do a put on it, but we'll see.
Marnin's one. What school did you attend for investing? I attended the School of Hard Knocks. I learned this I don't know, 30 years of trading. I'm just showing you guys the golden nuggets I think maybe work the best. I didn't really go to school for stocks. I did go to a few seminars, but what you learn in seminars, honestly, is I think for the most part propaganda. I think you need to find a strategy that you like. A real common strategy is dividend investing. Get your stocks have dividends. It's pretty easy. Another strategy is cover call writing, monthly income. That's a little more difficult. Other strategy, like what we talked about today, like the poor man's cover call, which is technically option trading, buying a lower option and selling a higher option, and that's risky because if the stock were to get destroyed and the price was to go into your options to go down, you can lose your whole position. Okay, so the option you bought, even if you bought in the money 100 for Nvidia and 120 for VST, ultimately, if the stock was to get destroyed, those positions would be also destroyed, and your whole investment could go up in smoke. I think they're a good deal because they dip so badly, probably climb back up. But if you have the shares, then you might lose, a good amount of your money, but you'll still have value. If you have an option, it could technically go to zero. So it's more risk, more risk, more reward. This is how it works. Pretty good. AI bubble is bursting. Will's world AI bubble is bursting. Maybe I'm buying gold. Will's world's buying gold. What was that? Sorry, I cut you off.
I was just gonna say, great session. Thank you.
Yeah, we can wrap up here, guys. I appreciate you. Thanks for joining. Thanks for the coins. I'm gonna try to get out of later this week, and then we can text me or call me. You have my number. You too tomorrow.
All
I
righty.
got you.
Thank
Y'all
you
be
guys.
safe out there.
Godric out.
Okay.